Well, let's imagine you own multiple properties and you're saying, oh my gosh, I may have to sell these assets now in preparation for the estate tax, but I built up this wealth and real estate that I actually would rather have my kids be able to, and grandkids to be able to live off of. So instead of having to sell those assets upon the death to pay for the estate tax, you still would have to sell them during your lifetime, or at least some of them. Hi, I'm Brett Swarts, founder of Capital Gains Tax Solutions. We're diving into today's subject, which is using the Deferred Sales Trust Plus to unlock estate tax freedom. And so guess what? There's two things that we know that are certain in life: death and taxes. And in fact, the estate tax is one of those ones that really combine those two things that if you don't have a plan for, your legacy is going to have a large amount of tax taken out upon your death. So let's first of all talk about what we're going to be talking about during this video. We're talking about the big problem, the big challenge faced ultra high net worth families across the US, as well as in 2026, what's changing, and maybe it's just really wealthy families in the US because of the exemptions. Number two, we're going to talk about how the Deferred Sales Trust can solve this. And three, what some alternatives might be that you might be considering and worth considering. And then four, what action steps can be used to take action right now on a plan. And so let's start with this. The big problem: if you are worth more than 24 million and you are married, or about 12 to 14 million single, you are faced with what's called a 40% death tax. Well, your estate is upon your death. And so the big way to figure this out, or the simple way to figure this out, is, hey, how big is the estate? How big is my total net worth right now? And how much is inside of the taxable estate? And once you've decided, you discovered this, or done the simple math, then you have an opportunity to solve the problem. And so that is step one. Step one is figuring out what is the problem that you might be facing. And number two, what are we going to do about that? Okay. By the way, 2026, what's happening? Well, there's these exemptions, which by the way are some of the highest they've been in many, many years. I think it's up to about 26 million with inflation right now for a married couple. And again, about 14 million or so for a single person right now. But that's only if you're a U.S. citizen, by the way. If you're not a U.S. citizen, it's only about $65,000 to $68,000 is the exemption, right? And so if you're listening to this and you're not a U.S. citizen, you have a lot of net worth that's been built inside of the U.S., guess what? Your exemptions are only about, less than $100,000, which means what? 40% is going to be assessed. Now, here's the number one misconception that a lot of people have, and they believe that the stepped up basis is going to eliminate that tax. Now, the stepped up basis does eliminate what's called capital gains tax, or at least it reassessed it at the value upon your death that your kids can inherit it capital gains tax free. But that has nothing to do with the estate tax, which is something that's entirely different. In fact, we liken it to the government's biggest mousetrap, and it's facing a lot of baby boomers and a lot of those that have built wealth for many, many years and are above these exemption amounts. And so if you're ultra high net worth now and you're above those exemption amounts with your value of your estate, or two, you're looking at ways to defer and or eliminate the estate tax, this video is for you. And so let's dive into some of the solutions. Number one, the Deferred Sales Trust Plus. Here's why we love it. Without having to give it all the way to charity, without having to gift it all the way to kids and grandkids, and also not having to buy life insurance, you have the opportunity to sell assets now and move them outside of your taxable estate using the Deferred Sales Trust Plus. By the way, what is a Deferred Sales Trust? If you're learning about this for the first time, it's an installment sale type of arrangement where instead of selling and taking all of the funds at closing, you're able to lend the funds to a trust and slowly pay tax over time. Now, the DST Plus is a little bit different than the traditional installment sale. There's no limits on the amounts per year that you can defer. It's more of an annuity contract that is set up and that's based upon your life expectancy. But what's really unique about it is the fact that upon the sale of your asset into the DST Plus, the outcome is it's outside of your taxable estate, which then unlocks the ability to your heirs to not pay that estate tax anymore. And so it's almost like it's freezing in a way your assets outside of your taxable estate, and then all of the growth of that as well as outside of your taxable estate. And so if you're looking to build legacy and have even more wealth for your family to give to the causes you believe in, and or for them to have to build, then the DST Plus is, to us, the best option right now, because it's so entrepreneurial. You can be flexible with the investments, or you can be passive as well. It takes care of it in one single day without any gifting, without any life insurance, and without having to give it all away to charity. Okay, now if you are charitably inclined, that's fantastic, and a lot of our clients definitely are charitably inclined. They're just not 100% charitable, so you can be giving it away to charity as well. If you also want to gift to your kids and grandkids, you can also be doing that simultaneously. The neat part about the Deferred Sales Trust Plus is it doesn't take away from those other things. It just either supplements or just solves the problem all at once in case you're running out of time. And so I'll give you a couple case studies on this. We had a client who was selling a multifamily property in Colorado. They lived in California, and their net worth was above those exemption amounts. And they were, right around 60 years old, and they were looking at a huge estate tax because all of their wealth was into commercial real estate, and all of it was 100% inside of their taxable estate. Now, they've done some planning and some gifting, but guess what? They feel like they're running out of time. It wasn't efficient enough. And so upon the sale of the asset, which is step number one, you need to list and sell the property. They moved it into the trust at the close of escrow, and that opened up a kind of a blue ocean of opportunity for them to invest. But the biggest thing it did is it eliminated that estate tax of 40%. And so the DST Plus can be that tool for you in conjunction with your gifting to your kids and your grandkids, and also in conjunction of maybe even buying some life insurance should you want to do that. The challenge with life insurance sometimes can be very expensive, and also it's not eliminating the root cause. It's just, I think, providing like a vitamin, because that is estate tax free, capital gains tax free for life insurance, and it often is just used to offset it. And so really sometimes it's multiple strategies, but we like the DST Plus because it can be that one size fits all upon sale and closing of the asset. Now, here's the key thing here. You want to make sure that you're setting this up before you die, right? Because if you die, it's too late. Your estate's going to be assessed based upon the time of your death, and they're going to look at what's inside of the taxable estate. So you want to be aware of that. What else might you want to be aware of with the Deferred Sales Trust Plus? Well, it has been audited, and in fact, one of the largest deals is in California, over $100 million asset that was sold in Southern California, and there was a no change, no findings audit. And so this structure and strategy goes back decades now, and it has a perfect track record. And so if you're listening to this and your legal professional is curious about it, we offer no cost consultations with you and your legal professionals to walk through how it works, the legality, and how as a team we can help you execute this strategy. If you want to learn more, you can go to capitalgainstaxsolutions.com. As well, you might be curious about where and how the funds can be invested post-close. For example, let's imagine you own multiple properties and you're saying, oh my gosh, I may have to sell these assets now in preparation for the estate tax, but I built up this wealth and real estate that I actually would rather have my kids be able to, and grandkids to be able to live off of. So instead of having to sell those assets upon the death to pay for the estate tax, you still would have to sell them during your lifetime, or at least some of them, but that would eliminate the estate tax, right? And then you can partner with the trust to go back and buy real estate again. Right. And just that change there of inside of the taxable estate versus outside can make all of the difference. And so that's a powerful way to understand that the Deferred Sales Trust Plus still gives you the ability to buy real estate. By the way, you can do it at your own timing without having to do a 1031 exchange, without having to maybe buy in the same market that the prices are still pretty high, as well as you can diversify into liquid investments. And so that's just a few things that do come up constantly with questions with clients. And so if you want to learn more about that, you go to capitalgainstaxsolutions.com. My name is Brett Swarts, and I love the opportunity to work with you, connect with you and your team to see if the Deferred Sales Trust can be a great fit. Thank you so much for watching this video, and we look forward to talking to you real soon. Bye now.